Welcome back everyone. Major news for FICO today as the stock surges double digits after months of underperformance. In today's video, I'll walk through what this news means exactly, what changed for the company, and whether I consider FICO a buy today. Since this is really a major change in the credit scoring business, I'll quickly walk through what the business looked like before and then move on to how the business has changed now. So yeah, let's take a quick look at what the business looked like before. We start with a borrower, and this borrower, they want to submit a loan application to a lender. This lender then orders a tri-merge credit report from a tri-merge reseller. This all sounds a little bit complicated, but it'll make a lot of sense in a minute. What this essentially means is there are these three big credit bureaus in the US, and each one of them produces a raw credit file because they have credit history on the borrower, and they also produce a FICO score by licensing that FICO score from FICO directly. So the credit bureaus pay FICO a royalty fee per score generated for using their scoring model. And this means that the credit bureaus charge the tri-merge reseller the FICO royalty plus their markup, which is intransparent, right? The tri-merge resellers buy from the credit bureaus pay FICO, and this is a very intransparent system. And so then the reseller merges the bureau files into a single tri-merge report, and the lender receives and is charged for this tri-merge report, which now includes also the markup for the reseller. Very intransparent. Instead, what we have now is a system where the tri-merge reseller requests and pays only for the raw credit file from the credit bureaus. And instead, now the tri-merge reseller purchases the FICO scores directly from FICO using their own new pricing model. So FICO now has their own pricing model. This increases transparency because now the reseller buys the raw files from the credit bureaus, but they get the FICO score directly from FICO. Okay, this is great and all, but why is this so great for FICO that it's up double digits today? This change is a major win for FICO. It lets FICO capture the margin that used to go to the credit bureaus, meaning more profit from every mortgage score sold. Second, by dealing directly with lenders and resellers, FICO now owns the commercial relationship instead of being hidden behind the bureaus. Third, it positions FICO as more transparent and cost-friendly, which is exactly what regulators have been pushing for. At the same time, the credit bureaus lose a revenue stream, which weakens their ability to promote VantageScore, FICO's main competitor. And finally, because mortgage scoring is the most important part of FICO's business, this move helps lock in its dominance in the market for years to come. Now let's take a look at some facts and figures and talk about whether I'm currently considering taking up a position in this company. When we look at the financials, FICO stands out immediately. Return on capital employed is nearly 56% and trending upwards, which shows the business is able to generate very high returns on the capital it uses. Gross margins are close to 80%, indicating extremely strong pricing power. FICO can charge for its scores without meaningful competition eroding profitability. Operating margin sits above 42% and profit margin just under 30%, showing the company converts a large portion of revenue into actual profit. Importantly, this isn't just on paper. Free cash flow last year was about 118% of net income, meaning the earnings are backed by real cash, not accounting adjustments. Finally, FICO has a healthy balance sheet. Interest cover is almost 7 times, so debt servicing is not a concern. And altogether, these figures highlight a business with exceptional profitability, strong cash generation, and financial resilience. Exactly the profile you'd look for in a long-term investment. With that said, I already have a small position in the company, and I'm indirectly exposed to Fair Isaac through the 2 ETFs I own. So given the current valuation, I'm not planning on adding more to the portfolio. I have, however, added one company to the portfolio today that I believe will outperform in the medium to long term. So subscribe to see that if you're interested. And for those of you who are interested, I will also do a complete portfolio breakdown at 1,000 subscribers.